Good evening, everyone. Welcome to the channel. Today I am going to talk about China Feihe interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. China Feihe Limited offers a diverse range of businesses and services, including production and sale of dairy products, raw milk production and sales dairy product, manufacturing under various brands such as Super Premium Astra Baby, Zhenjai, and Xingji Yaohu adult milk powders, liquid milk products, soybean powder and rice powder, supplement products, healthcare products, retail of vitamins, minerals, herbs, and other nutritional supplements. The company sells its products through various channels, including distributors, retailers, e-commerce platforms, and direct sales to end consumers. China Feihe's stock price has dropped by -5.24% over the past year due to several key factors. A significant decline in revenue and net income, largely influenced by price discounts for inventory clearance and childbirth subsidies, contributed to this drop. Additionally, Goldman Sachs downgraded China Feihe's rating to neutral, citing continued destocking and delays in launching ultra-premium products as contributing factors. These financial pressures have put pressure on the company's profits, leading to a decline in its stock price. The primary drivers of revenue growth and decline for a company in the infant milk formula industry can be identified through an analysis of various factors. On the growth side, increased consumer confidence in China's infant milk formula products, e-commerce sales among younger generations, and government grants have contributed to revenue growth. Specifically, the raw milk segment has seen a 10.3% increase in revenue, while the United States market has experienced a 12.1% rise. On the decline side, reducing channel inventory of infant formula products, providing childbirth subsidies to consumers, and declining sales in certain regions such as mainland China and Canada have led to revenue decreases. The raw milk segment has also seen a decline of -7,607 units. Overall, these factors highlight the importance of market trends, consumer behavior, and government policies in driving revenue growth or decline for companies operating in this industry. Net income and profit margins decline. The company's net income experienced a significant decline of 17.8% from RMB 6,852.5 million to RMB 5,634.9 million. This downturn can be attributed to several factors affecting profit margins. A notable contributor to the decrease in net income is the substantial drop in other income and gains, net by 37.4%. Additionally, the gross profit margin decreased from 67.9% to 61.6%, likely due to increased selling and distribution expenses, down 10.2%, and higher administrative expenses, up 4.7%. These changes collectively resulted in a decline in net income and profit margins. The company is generating positive operating cash flow, as evident from its reliance on cash flows from operations to finance its operations. The financial statements reveal a substantial amount of cash and cash equivalents, totaling RMB 6,476.6 million as at June 30, 2025. Furthermore, the specific numbers provided in the report demonstrate that the company generated RMB 92,587 in cash from operations, and had net cash flows from operating activities of RMB 77,421 in 2025. These figures confirm a strong ability to generate positive operating cash flow, indicating a healthy financial position for the company. The company's debt level and interest expenses have undergone significant changes. Notably, the interest-bearing bank borrowings decreased by substantial amounts across various pages, with a total reduction of RMB 198,420 on page 34 and RMB 19,359 on page 35. Additionally, pledged against biological assets decreased from RMB 1,162,142,000 to RMB 916,799,000, resulting in a decrease of RMB 245,343,000. The interest expenses also saw a decline, with total interest expense on financial liabilities not at fair value through profit or loss decreasing by RMB 9876. Interest on bank loans decreased by RMB 11,904, and interest on lease liabilities decreased by RMB 611. These changes indicate a reduction in the company's debt level and interest expenses, suggesting a more stable financial position. The company's financial performance varied across different segments in the given period. The dairy products segment showed significant improvement with a revenue increase of RMB 952,228 and a profit before tax rise of RMB 1,385,588. Similarly, the nutritional supplements segment performed well with a substantial revenue growth of RMB 11,253,926 and a profit before tax increase of RMB 2,908,155. On the other hand, the raw milk products segment struggled, with a low revenue of RMB 1,204,776 and a modest profit before tax of RMB 129,208. Management is outlining a clear strategy for the company's future growth. Key points include focusing on core business and promoting independent innovation, aspiring to become a dairy powerhouse in China's dairy industry, contributing to the Healthy China initiative, maintaining a consistent dividend policy of distributing at least 30% of net profit each year. These goals indicate a commitment to expansion, innovation, and community involvement, while also prioritizing shareholder value. The company's financial summary reveals that it has a history of paying out dividends to its shareholders. This indicates a commitment to returning value to investors through regular distributions. Concerns about inventory buildup and supply chain disruption. The financial summary of the report highlights concerns regarding inventory buildup. The data suggests that there is a potential issue with excess stockpiling. The cost of sales increased by 8.4%, indicating a possible accumulation of unsold goods. Furthermore, the finished goods inventory saw an increase from RMB 404,585 to RMB 548,980, which may lead to supply chain disruptions if not managed properly. These findings indicate that there is a need for careful inventory management and potential adjustments in the supply chain to prevent future issues. That concludes the financial summary for China Feihe. Feel free to comment below, and I will be happy to answer them when possible.